What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we're talking retail. Kohl's, ticker KSS. That's right, folks. So I want to say what's up. Got some new faces here that I see. Dr. B, hey, how you doing? Mr. Odo, how are you? Of course, the usual suspects. Dean, Kurt, Tremblay, PJ, Danny. Oh, how's everybody doing? Trevor? What's up, folks? Okay, so you know the drill. There's a little bit of a delay from when I talk to when you guys hear it. So I try to interact in the chat here, and I do go off on tangents. You know I do. So I'll start to address something, and it's not happening in real time. There's a little bit of a delay, so just bear with me a little bit. Today we're going to talk about KS. It was a K. Didn't I say K? We're going to talk about Kohl's. Look at this. Look at this, guys. How did this drives me crazy, man. So I don't put these up, right? Somebody they switched the H and the O on Kohl's. So it's like KH. I mean, come on, guys. Unbelievable. Anyway, we'll fix that later. Why do people do this to me? Trying to throw me off my game. Now, I don't know if you guys saw the report out on Michael Kors this morning. A little better than people expected, and the stock is up big. So, does this point to any sort of major turnaround that's happening in retail? And I don't know. I think that was a little bit more Michael Kors specific. Let's kick things off here with the price consensus and EPS surprise chart here on Zax.com. As always, the black line corresponds to the price, which is along the right y-axis. The multicolored lines correspond to EPS, which is along the left y-axis. And these represent the evolution of our Zax consensus estimates over time. Little green arrows are earnings beats. Little red arrows are earnings misses. So we've got a string here, about 4 beats in a row for Kohl's, which is pretty good. And if you see this multiple dashes here, that is a pretty good indication of the magnitude of the beat. So when you have a bunch of lines, then it means they had a big beat. But we'll see that. That'll pop up in the other numbers that we have too. Then we have what's been happening with Kohl. So look at this negativity here throughout 2013 and 2014. And then 2015 was a pretty good year. You had a trough here, and they baked in some gains. So that's why you had a huge spike up in the stock. But since then, these estimates have been going in the wrong direction, falling off of a cliff into this year. Now, the good news is there appears to have been a little bit of a trough. I thought I closed my Skype. Sorry, guys. There's been a little bit of a trough here. Plus, you've got a couple of beats. So hopefully this is stabilized. And then if you're looking here, the lows, 2016, kind of been retested a little bit, but have been defended. So that's a good thing. So what we're looking at is, has Kohl's been able to turn things around here in 2017, or are we going to get more of the same? And you'll see why I picked Kohl's when we look at the ZRS and I give you that surprise, the consolidated surprise sheet. You'll see, and you can see it here in the PNC, that this thing has a tendency to whip around on earnings. So I'm expecting some volatility. Now, the one thing that is irking me here is that the stock's already up pretty significantly off of the lows. But when you put that in perspective, compared to where the highs have been heading into the end of last year, a lot higher. And remember, this is coming down during a time where the rest of the market did quite well. So just some things to keep in perspective. And we'll look at the technical chart in a little bit too. Here, let's look at the detailed estimates page. Right now, they are Zach's rank number 3 hold, but we do have a A in value, B in growth, and a C in momentum right here. They're going to report before the market opens on the 10th So 2 days. You got the rest of the trading day today and the rest of the trading day tomorrow to make your decision on whether or not you want to mess around here with Kohl's. Look at what the revenues have been. So there's been revenue contraction here in Kohl's, and I'm going to dig deeper in revenue. Actually, let's just do that now. Let's get into it on the revenue side. Let's go ahead and load this up so we can see. And we're going to go back 5 years on the revenue. Pull this up. And here you can see, I mean, that's been the story. This contracting revenue story has been the prevailing story here for quite some time. But it's not that terrible, okay? Losing 1%, you know, coming up 95 bips in 2016, losing 2%, losing 1%. In the grand scheme of retail is not terrible. It's not a terrible trend. And if you look over on the EPS side, you can see there's still some contraction, though, in EPS over the course of the next 2 years, really, and then they get real optimistic further out. I hate it when companies do that, right? They're just like, no, it's going to be bad, but eventually, you know, 3 years out, it's going to be great. I don't know. I don't like it when they put that pie in the sky all the way down out there, but for some investors, they have the patience, I suppose. Just not this guy. So now let's look at the earnings side here, zoomed in. Current quarter, they're looking for a 4% contraction. Next quarter, this is no bueno. I mean, this really falls off a cliff. You're talking an 18% contraction in earnings next quarter. That's no good. Current year number, -4%. Next year looks like -2%. What have some of the analysts said about this recently? So you do have, just over the course of the last week, 2 analysts have increased their earnings estimates for the current quarter, 1 for the current year and 1 for next year. And on the bearish side of the equation, over this last week also, things got a little bit more bearish for next quarter. The overall impact to our Zacks consensus estimate, still bullish here, 116 to 117 for the current quarter. Next quarter's gone down from 69 cents to 65 cents. Current year from 358 up to 361. Next year number from 360 down to 354. So basically as soon as recent rather as 90 days ago, we were looking for a little bit of growth in EPS from this year to next year. Now that's gone. Definitely looking at a contraction. So that could provide a little bit of risk for this earnings report here, guys. And of course we see the surprises. So they are coming off a string of beats here, which should bode relatively well for the company, for this earnings report rather. Now let's look at the technical view. See if we can get this queued in here without having Internet Explorer crash on us today. And again, the move has been pretty furious here recently. I'm going to zoom out just so you can get this November gap, because this is important. This gap down in November is an important place. So the bottom end of this gap, and we can get a detailed number on it just by clicking, 44 even, right? Oops, sorry. Yeah, 44 even. And today you've seen the stock get up into the 44, so 44.14 here ahead of earnings. That's a very good sign that it's fighting its way into this gap, right? We do have this one rope-a-dope where we got up there before, but the 50-day moving average provided some upside resistance to that too. Now, shares are in an uptrend on the positive side of that 50-day moving average. You also have this nice, slow increase in the shaken money flows, which are positive too. And then you have a little bit of an overbought condition on the commodity channel index. So technically the picture is improving pretty well here for Kohl's. I also like the fact that it got past this big nasty day. We're up above that. So I think we're fighting in this gap here, which should bode well for earnings, right? Because gaps get filled. So that could be a good thing. So from a technical perspective, I'm actually feeling good about Kohl's from a technical perspective. And I like the leak out that's happening here to the upside. let's take a look at what the market is giving us right now on Kohl. Again, they're going to report before the market opens on Thursday. So let's look at this Friday contract, do some quick math. So instead of the stacked view, we're going to look at the side by side. Stock's trading 43s. Let's go ahead and highlight. Oops, let me bring this over here. There we go. So the 43 calls trading 160 by 175. So let's call that 168. Go ahead. That's the at the money puts, which are 125 by 140. We can call that what, 133. So they're basically expecting $3, 7%. Basically 7% is the move that they're expecting here, right? So $3, so you're talking 46s, 40s, 40s, 46s. Let's go back to the chart. 40s are here, still above the 50-day moving average. 46s are halfway in this gap, okay? I'm going to go on a limb here and say that they are underestimating how much this Kohl is going to move. Well, 7% does seem like a lot, but I think it gets some drift. There is one little tidbit of information that I withheld from you guys. I did not do it on purpose. I just didn't get to it yet. Surprise, consolidated surprise here. This is going to show us how much the stock has moved over the previous earnings reports. Last quarter, negative 9.5. Quarter before that, 2.9. Then you had a 16% and 18%, 7.6%. So there have been some serious moves here on Kohl's. I think they repeat themselves again. I think Kohl's is going to move a little bit over here. Let's go ahead and get back to this. I've been getting very short term in my focus here, and I think what I want to do now is spread it out a little bit. I want to give a little bit more perspective on this in terms of, you know, why we're using the Zacks rank analysis at all. We're supposed to be catching, yeah, you're gonna mute me for the music copyright. This is my cover. I'm singing over it. I'm thinking that these guys are gonna drift. So we've been doing a lot of like the front month contracts or the front week contracts. Those are basically coin flips rather. Doesn't give us a lot of time to, you know, position our money or react to it even. Yeah, Ralph Lauren moved today too. Dr. Paul, I was talking about Coors also moving very nicely today, but that's an entirely different story there. The interesting part about Kohl's here is they got a new partnership with Under Armour that they're unleashing in their stores, and Under Armour is motivated, I think, where they need to make this partnership work for them because they're underneath the under the gun here. I don't even know what any of this is. I'm not gonna get involved in this whole there's music in the background thing. You can't prove what it is, right? I don't know. I just figured it was better than just the silence that of me breathing or the dog occasionally making noise in the background. If they yell at us, then they yell at us, and we'll change it. Okay, then let's look at this. So the 43s, we can pretty much use this 4250 as a nice little anchor. So I'm going to get vertical on both of these guys. And if the stock's at 43, you're basically saying 40, 46. I'm going to go all the way to 47.50 on this because that's really where this gap is. So this is a more bullish trade, obviously. So I think putting together a bullish call spread, if you bought the 42.50, this is the September, 15th expiration, it would cost you $2.55. Simultaneously going short the 47.50 call, you're going to get back 68 of those cents. So 187 is your net outlay here. Then the difference in strike prices is $5 minus that 187 is $313 that you can make on 187 or 167%. And I realize this is a pretty big move. Those are big numbers that we're throwing out there. But I think if the trend continues, it should be great here for Kohl. So I'm going to say that the bull debit is long the September 15th. Let me just double check this is the 15th before I get into this. Yeah, 15th, okay. Long September 15th, 42.50, 47.50 call spread for $1.87 net deb. All right. And if you agree with the bull case for Kohls, that should happen with relative ease. Now on the bearish side, remember this is the thing that's been beat up pretty good already in the grand scheme of things. So I think if you're gonna be a bear, you got to just tighten it up a little bit and just stick with this 42.50 40 put spread. So in this case, I think you go long the 42.50 put for 210, simultaneously go short the 40 put for 113. So your net outlay here is going to be 97 cents. The difference in the strike prices is 250 minus that 97 means you can make 153 on 97 or 157%, which is pretty darn good here. So the bear debit is long September 15th, 42.50 40 put spread for 97 cent net debit, which probably pretty much everybody would get filled at 100 anyway, right? But that's what I'm looking at, okay? In terms of risk, and I want to thank David. He's not, I don't know if he's in here today, but he reminded me, hey, you know, you used to talk about give like this star rating for risk, and you haven't done it in a while. You know what? You're right, and that's my fault. So this is what I'm going to say, guys. I think the trade that pays is the bull debit here. And I'm going to give that, I'm going to make that a 3-star risk. Is that a thing? That's a terrible star. How do you do this? You guys ever tried to draw with a mouse? There it is. Is that a thing? 3 stars. I'm going to get a sweet graphic made. If only I had a guy. I do have a guy. We just need to put him to work. I think it's out of 5 stars of risk. This is a 3-star risk, right? So relatively risky here. And what really is the risk? Well, the risk is that they've already priced in too much of this move, right? The risk is, hey, this thing was already from 36 to 43, so maybe it's already had its day. I'm going to do 3 out of 5. 3 out of 5 stars on the risk pattern, meter here. Yeah, so there you go. So 1 star of risk. Okay, first of all, there's a big... I would stop drawing these stupid stars. I would say that 3-star risk is a coin flip. How about that? So when I say a stock has 3-star risk, I say there's about a 50% chance that you're going to lose all your money. That sounds funny, right? But I think that's where you go. Because if you looked at it that way, I know this sounds crazy, right, guys? But look, that was 150%, right? So if we had a 50% chance of making 150%, there's our expected value there, right? And then if you get another 100% chance of losing it, or a 50% chance of losing it, right? You still have a positive expected value. So if it was 1-to-1 and you did a coin flip, right? So you flip heads, I win $1, tails, I lose $1, and you keep flipping it over and over again, your expected value is 0. That's not a trade that you should take, right? So here, the payoff is maybe 150% if you get it right, and I think the risk of losing it is a little bit of a coin flip here, right? So that's kind of what I give on the 3 stars. So overall, if you game that out for the rest of your life, you would make money over the long run. See what I mean? 1 star is like our out of the money, like an out of the money put spread or something that we put, an out of the money put spread that we put on, right? And then the risky stuff would obviously be these lottos that we're buying, out of the money calls and stuff like that. That's like 5 stars of risk. Or even the company that we're talking about, I think, moves a lot. So these guys move a little bit. Let's look at lottos. So I guess the real high risk trade is that this thing gets in this gap and fills a good chunk of this gap. So if you buy calls out of the money, 45s, 46s, something there, I think, yeah, guys, if there's links and stuff that you want to share, Dr. Paul, I'm glad you brought that up. Right down here, echat.co/room/213012. Get on board with us there, and there you go. And you can share all the links that you want. And we're in there. Okay. Let's look at a lotto here. I think you get more aggressive and get in here. 46s. I think if you get somewhere in here, basically any of these. Now the lottos are high risk options that have a low chance of occurrence, but if it hits, it's going to be great. So you basically saw, the best that this thing is done. Wasn't there a 20% move? Wasn't that what it was? 19% on my other platform. Let me bring this up for you again. Yeah, so 16 and 18% move. So you got to basically game out, more than 10%. More than 10% move. Remember the stock's here, so that's basically 47 and up. So you got 46.50s, you got 47 and a halves. I think the lotto is the 46.50. So how about that? Lotto, long, August 18th, 46.50 for 55 cents. So that's what I think. Now, Dean brought up a very interesting point here. Now he asked, with the larger expected move, no net, I'm assuming NC is net credit that you're asking. So you're right about that. The reason why I didn't give you a net credit option partially is because I expect the stock to move a little bit more over the course of the next month and a half than these guys are pricing in here, okay? So there you go. So that's why. So if I thought on the flip side, let's say if I thought that they were pricing in too much and the move is much higher than I really expected out of the stock, then I would look at a net credit, right? Because you're basically saying, okay, options market, you're wrong. I'm going to sell these out of the money options and collect that premium, right? Which is something you guys can still do. You don't have to follow exactly what I'm talking about. Like, for example, let's say you were looking for a bullish net credit. Just go a little bit out on this put spread, and you can keep it just in this week, a week after earnings. Because if you don't think it gets there, it doesn't, because you can still find a little bit of premium here. Look at this 40.39 even, right? So you sell a 40.39 put spread, you're going to sell it for 60. You're going to buy this for 43, so you've got 17 cents that you're going to make and have 83 cents at risk. So 17 divided by 83 is 20%, right? So you can make 20.5% in 1 week on this move, just as long as Kohl stays above $40. So you can definitely construct that. And then on the bearish side, you can go out of the money here also, right? But in the wake of some of these big moves that I'm seeing in retail, I think this might continue. I think this little mini resurgence in retail may be happening. And I think that the theme of this quarter is going to be beat up restaurants and ease up on retail. I think that's what's going to happen. But we shall see. Okay? There we go, guys. I want to do one more quick little thing. Because the good Dr. Paul asked me about something yesterday, so we're going to do a little bonus coverage. It was Horizon Pharma Dr. Paul was talking about. And this is the problem, guys. What I typically like to do, if I'm seeing trends, strong trends, I like to follow into these trends, right? I do, guys. I got a little time today. Let's hang out for a little bit longer, and I'm gonna do some stuff here live. Yeah, totally fine. So I look for these trends, and when these trends start to change, and then you have these dramatic shifts in the trend, this kind of stuff throws a lot of this analysis out the window, and then so you don't have that edge. All of this is meant to give you an edge. So when this kind of stuff happens, the tea leaves aren't making sense. The water's getting really cloudy, and I'm not quite sure what to make of it. So I'm losing my edge, or any edge that I may have had. So that's why I don't like this kind of stuff, right? So when I see this, I basically just kind of sit. Like, the sidelines are an okay place for me. Trades, a good trader, this wonderful dude, the futures trading guy, D-Boy, he says trades are like buses. You know, just wait, there's another one coming, and it's totally true. So Dr. Paul asked me about this. I'm on the sidelines on this. I think these things need to work themselves out, and I don't see any clear-cut trend here, so I'm on the sidelines. Biotech's been good, though. Looks like a lot of you guys are talking about DDS. Let's look at what we've got here on DDS. A little different from Kohl's, right? Oh, yes, Dr. B. I'm going to do Disney, too. But see this negative trend that they have, but there's a difference with Dillard's and Kohl's. This is still dipping. It hasn't turned yet. Where it looks like Kohl's has turned, maybe. You know, do you have some sort of reason that this is turning around, right? Obviously, I can't get into the details here because this is like a snap thing, right? So I'd have to read some things. But just first snap glance, I'm looking at this like, and you got this divergence between where the price has gone and where the stock is, the EPS is heading. So, just I don't know if they've made their turn yet. Stock sure rallied though. Disney is so large that it makes it hard to come up with a direction for them. So the studio arm is doing fantastic for Disney. But now, you know, don't forget they own ESPN, other networks. So they're getting hit from the cord cutting. And I think that's going to continue to put pressure on them here in the intermediate term. So for Disney, I think I'm looking for more of a non-event than anything out of Disney. And when I was looking at what I was going to talk about this week, this page here has a lot to do with my reasoning. Because I want to see if the thing moves on earnings. I mean, we're talking about earnings, so we got to do that. And if you look, I mean, Disney just doesn't budge. A couple percent here, a couple percent there. Just doesn't give us anything. What else do we got? So we got Disney. You guys are talking Priceline. I usually do shows on Priceline. That's a little bit more complicated than just a snap judgment here that I want to make. NVIDIA, we're doing NVIDIA this week, of course. And then Snap. This is the problem with Snap. Eventually, it's like, how deep down in the toilet do you want to dig to pull up this? Their management is just terrible. That little cocky 20-some-odd-year-old CEO thing, well, we're not worried about Facebook. Dude, you should be worried about Facebook because they're going to eat you alive. And if these guys aren't really, delivering on their promises, I mean, this is what happens. A little bonus coverage, folks. Twilio. I like these guys at 30 and then got stopped out. I think that these guys are gonna turn it around. I think things are gonna get good for Twilio eventually here. Yeah, maybe an Iron Condor on Disney. I would just avoid it. I just avoid it. Live Nation. These guys throw a bunch of concerts. Is that what they do? Is this the summertime concert guys? I think. Snap's the worst. Let's see. Where's my? I gotta get back to Zach's. There we go. Okay. Anyway, Snap. I just hate the management there. Those guys are losers. Of course, they're bazillionaires, right? So, but I don't know. From what I've read of them, things that they've said, it's just, it's not my guy. Like, these are the kind of people I would make fun of on, the trending stocks, which I'm bringing back too, by the way. We're going to get it. Yeah, so ticket sales, right? All right. Red Robin turning the corner a little bit. So I think I want to make, I'm glad you brought up Red Robin. I'm going to make a clear-cut distinction of who I'm talking about with the restaurants. I do not mean the sit-down restaurants. I mean the fast casuals. That's who I want to destroy. That's who we need to look at. So we need to, I think we've got a few more because we didn't do a Chipotle show, right? The Shake Shack already reported. These are the kind of guys I want to talk about. What's that Middle Eastern? There's a Middle Eastern one. I can't remember off the top of my head here. Who's that Middle Eastern? It's a Middle Eastern kitchen. It's higher end. It's very expensive. In the grand scheme of things. Yeah. Basically, DDS, I'm saying, is just, do you have a compelling reason for a turnaround? And if the answer is yes, then okay. But I don't know what it is. So. Zoe's Kitchen. That's what it is, Dr. Paul. You got it. Zoe's Kitchen. Zoe's Kitchen. That's it. All right, guys. Keep your fingers crossed. I may have that new car. I worked some magic. There's always magic. So I'm doing my best to help out ticker AN. I'm trying to help out AN, right? They had a bad. It's going to get a little bit worse for them. I'm going to try and help them out a little bit. I'm also going to try and help out GM. So I'm helping out both of these guys, hopefully. And we'll see. I'm waiting for a call back. Trying to buy a car in Florida is hilarious, by the way. I've never taken so long. In Chicago, I've bought cars like soup to nuts, 3 hours. Here, it's Tuesday. I really started this process last Wednesday, I think. It's like it's been a week, and it's insane that these people move so slow. It's unbelievable. Anyway, all right, that's all I got, folks. Mañana, who do we got mañana? Is tomorrow NVIDIA? Yeah, it is. Tomorrow's a big NVIDIA show, so that should be good. We're gonna open that up to everybody. I noticed we had some hecklers, or I had some hecklers on the live thing. Of course, it's after the fact. People talking garbage about me. I love it when they do that, right? The guy's throwing names my way, and his whatchamacallit, his profile picture is like a kitty cat. And it's like, yeah, I'm sure you go hard. Your profile picture is a kitty cat. Like, come on, dog. Yeah, you know what, Paul? Dr. Paul, I got the credit union. These guys got me a number that, like, the closest number I could get, they beat it by $7 grand. So these guys got some magic, man. I don't know. It's something going on. I didn't even mess with Tropical. Tropical, they're not even. I don't know what's going on over there. Anyway, all right, guys. I gotta get out of here. I gotta take care of some other business. Thank you so much for hanging out. Mañana, we're gonna do Nvidia. It's gonna be fantastic, and hopefully we're all gonna make a bunch of money. So I will see you all tomorrow, and of course in the chat. And that's all I got for you guys. Have a great, great day.